Welcome to the Rick Helps Real Estate Show, trying to make sense of this crazy Arizona market. I am back. Thank you, Jessica, Pat, Jackie, and Ruby for carrying the load while I was away. As you can see, I'm a little bit thinner now. I've had quite my share of hospitalizations the past couple of months, so hopefully it's behind me. I'm recovering. It was a really bad infection and really kicked my butt. So it's good to be back. I appreciate those that have sent me well wishes and encouragement. It really makes a big difference. But I come back and I look at the numbers and I thought, okay, man, something has to have changed. It really hasn't. I'm really surprised. I knew summer would be slow, and it is slow, but it was slow last summer as well. And I'll show you a couple of numbers here because it's the number of new listings has dropped, but so has the number of new contracts, and they're almost exactly the same. 2,600 new listings, 2,600 new contracts. Now, that doesn't put pricing pressure on anything overall. That's not a by city analysis. That's if you got the same amount of homes coming on that are selling, there's no reason for prices to go up or to go down. And in most of our market, that's where we're at. Pricing driven primarily by luxury. Luxury's doing really well, North Scottsdale, etc., Paradise Valley. But if you look at our chart here, Handy Dandy Cromford Market Index, and you get this every Monday morning at 7 o'clock, all you have to do is sign up for my newsletter. I don't spam you. That's all you get is the newsletter. Now you can see here that Queen Creek has bottomed out at 51. That's because there's a lot of new construction down there. And so competing to sell your resale home in Queen Creek is kind of tough. You better be on top of it. Maricopa is still hugging the bottom there at 57.9. Paradise Valley is 191, which is pretty good. Now, this is an index, so anything over 110 is considered more advantageous for sellers. Anything below that, below 100, for buyers. Gilbert's sitting there about flat at 109, Avondale 109. You get down to Queen Creek, does it mean that you're going to get a bargain? Well, it means that it's pretty hard for sellers to sell at what they consider the comps. You know, they go in and they look and they say, well, what sold 3 to 6 months ago? Doesn't matter now. You're toast. You're going to have to pull the price back down. That's what we're seeing. And we are seeing people really starting to be more realistic with their pricing. Buyers, on the other hand, are still trying to squeeze every dime out of you. They still want a lot of concessions towards closing costs. They want you to buy down their interest rate. They want to keep your dog. I mean, you name it. They want everything. And so just be prepared for that when you list your home. You're not going to get your asking price. Even if your asking price is good, the sentiment out there is, oh, they want this. I'm going to offer them this. But you can't skimp. Your house has got to be immaculate. It's got to be up to date. The photographs have to be fabulous. And we're seeing more and more of that. If you look by city in the Cromford Market Index, you can see here that Queen Creek has been trending down. It's kind of starting to go up a little bit. Compare that to Phoenix. Phoenix for this year is pretty flat. Chandler is starting to come up a little bit. And then, of course, we mentioned Paradise Valley being the top of the game. You can see what's happened to their Cromford Market Index. It's gone wild, but there aren't that many homes that sell, so that chart can zip around quite a bit. Those of you in Santan Valley, now that they're breaking it apart, you're still in trouble. It's still hard to move homes down there. Surprise, sit here and look and see that they are starting to have a better market. Their Cromford Market Index is approaching a little over 80. So that's still advantageous for buyers, not nearly getting squeezed out as much as a seller. Now, if you want a detailed market report for your zip code, that's what that little QR code is up above my head here. And I also have a link down the bottom. Click on that. Tell me what you want. If you want more than just a zip code report, give me some detail and tell me what you're looking for, and I can get that out to you. I get it out a little faster now than I did a couple weeks ago. That's for sure. Let me pull out this one. This is my favorite one. And I get to use my handy dandy magnifying glass, and it's right here. And I like to show this is an index, Cromford Demand Index, Cromford Supply Index. Notice how they're both going down. It's the gap that I look at, and the gap has remained the same. So again, no pricing pressure. If the listing index is going down and the number of buyers index is going down, then everything's going to remain pretty much the same. And I expect that through most of the summer. But the problem that we've had is we have too many surprises. We got a war. We got oil shock. We've got interest rates that people are hoping to come down, but look like they're going in the opposite direction. So it's kind of hard to predict where the rest of the summer is going to be. Plus, you have an election coming up. That always makes people sit on their hands. Take a look at here at active listings. You can see in the green line here, we're hugging last year. We're staying right where last year was. Nothing's changing, which again brings me to my pending listings. Same thing, week after week, it's the same doggone number. We're up slightly higher than last year, but not by much. You can see that it's just going to stay where we were last year, and it's going to drop as we get into the summer months here, deep into the summer. That's the kind of summer I'm expecting, barring any unforeseen circumstances. This is a bit of a busy chart right here. I'm just going to show you one thing, and that is that our resale volume is up 7.3% for July for the year, but down 11.7% for the month. That's because went from June to July. And these are homes where contracts were written 30 to 45 days prior to that. But it is a little encouraging to see that year over year, those homes are up 7.3. But here's the surprise here. Take a look at new construction. They're down 19.7% versus last year. Why is that? They're throwing everything at you. 3.75 interest rates, down 8.2% versus last month. So it looks like resale's starting to have some better times when it comes to competing with new builds. Not by much, though. Last thing I look at here is a page that means absolutely nothing, so we won't even show you that. So as we go through and we look at coming towards the summer, the analysis is saying that interest rates are probably edging higher. Follow the 10-year Treasury, not the Fed. The Fed can come on and they can announce that they're going to do another 0.50 reduction or 0.25, and it's really not going to be diddly squat. It's the 10-year Treasury that's driving interest rates. And right now, the bond traders, they just don't believe that anything's going to be done about the debt. And the debt's starting to squeeze interest rates quite a bit, starting to affect you and I on credit cards and on mortgages. And they don't believe that the economy is really going to be doing that great. But at the same time, if they thought the economy was crashing, the bond market would react differently. It's more of a safe haven. You would start seeing interest rates coming down. So they're kind of sitting on their hands just like everybody else is, just like buyers and sellers. And that's the market that we're in Phoenix. So don't forget, sign up for my newsletter. Please ask for a zip code report. It's been lonely on my side. I haven't got to do one for a while. In the meantime, it's good to be back. Thank you, everybody, for watching. I intend to be putting out more content as we go forward, God willing. And good to see everybody. Take care.